I'm positive about, nature and the carbon markets more broadly because, we'll always need nature to survive as humans, and so much of our economic life and way of life depends on nature, even indirectly and also directly. So
100%.
I'm positive on that side in that we're going to continue to need it. So we are going to continue to need to invest into it. And
Yeah.
there'll be increased incentivization to do so with increasing guardrails, structure, integrity initiatives that help to kind of guide that capital flow into where it's really needed. And also as we approach 2030, which is where we'll be in 5 years' time from a kind of demand side perspective, corporates will be approaching, some of them might have set 2030 short to medium term net zero targets, and those, so there might be a bit of a reassessment of those, or kind of a consideration of where corporates have got to versus their goals as well. So that will
Mm.
be that will be hopefully helping to incentivize further demand for carbon credits, and then also further capital allocated to the voluntary carbon market.
Welcome back to This Week in Carbon. I'm your host, Edward Smith, and we're back after a week off. Apologies to our audience, but I'm typically alongside my co-host, Renee Velasquez, but unfortunately, he cannot make the episode. But regardless, we got to move on. We got to move forward. So today we have a fantastic guest, Phoebe Scott from Climate Asset Management. Phoebe, thank you so much for joining me today. I'm super excited to dive into a number of topics with you on natural capital and the evolving landscape there. So thank you so much for joining.
Thanks so much, Edward. Great to be on the podcast with you.
Yeah. So I think to start for the opening, it would be great to have a quick intro about you and your role at Climate Asset Management or CAM, and maybe briefly say what CAM is doing in the space, and you can touch briefly on your career journey prior to entering the world of climate finance and natural capital.
Sure. Thanks a lot. Great to be with you today. So yeah, I have been at CAM for the last 4 years in our nature-based carbon strategy team, working on the investment team there. And prior to CAM, started my career in investment banking. And while I was in investment banking, was working on lots of different deals across different sectors, and really starting to think about how I could also use my skill set to provide impact as well as simply returns for our clients and wider kind of stakeholders. And that was when I really got interested in ESG, and that was at the moment where ESG was a really kind of a hot topic in finance as well, and corporates were really starting to think about how, and corporates and investors were starting to think about, how you can assess a company's performance and potential future projections of profit, not just from the commercials of a company, but also from these factors termed, environmental, social, and governance, as I'm sure you're well aware. So that was really interesting when starting to think about the kind of triple bottom line approach, and more broadly how investors are looking at corporates from a long-termist, not just a short-termist lens. And while I was looking into all of that, I really got interested in particularly the E of ESG, and started to think about ways in which I could further my education in this space. So I took a year out of professional work to undertake a master's at Imperial called Climate Change Management and Finance. And that was a really great experience. It combined the business school centre with the Grantham Centre for Climate Change. And so that was really nice because you get a really great like depth and breadth of the science of climate change, while understanding the business imperative to act on climate change as well, covering lots of different topics like carbon accounting, the impact of climate change, the physics of climate change, climate finance, renewable energy, all those great things. So off the back of that was then looking to see where I wanted to go next, and really saw CAM, which had only just been set up at the time it got set up in August 2020. So we're actually just celebrating our 5 years of existence, which is really great place to be. And as I was looking at the market, CAM really stood out to me as it was very ambitious in its goals to really be a market leader in natural capital investing and really seek to drive institutional capital into the nature space, which at that point in time was becoming quite a new buzzword. And investing into nature has been around for very many years, and really understanding nature from its kind of core services in terms of either its crops, be it agriculture or timber, from forestry activities, or simple land value, and seeing how that appreciates over time, but really incorporating the provisioning services and valuing nature intrinsically and holistically has been a bit of a newer trend, and also understanding and deploying the market mechanisms through which to do so. And obviously this podcast is called The Week in Carbon. You guys talk about carbon credits every week, and carbon credits are one of the mechanisms through which you can ascertain a value onto nature's provisioning services that's not through which, a tree's being chopped down. You're actually trying to conserve nature, for example, through REDD+ projects.
Mm.
And so that I found really exciting. And I can also talk to CAM's two strategies. So we have a nature-based carbon strategy, which I work on, which is really about partnering with carbon product developers in the global south to provide investment and for those products generate carbon credits across avoidance and removal carbon projects. And then we also have a strategy called the natural capital strategy, which is focused on the global north, and that invests in real assets across agriculture and forestry. But that's kind of more traditionally targeting institutional investors that really have the focus on a joint focus, and this is a focus across CAM as a whole, of combining impact and returns, and that impact should not be detrimental to returns. So really seeking to combine those together in an effective way for our LPs and also for our wider stakeholders and wider society, because ultimately investing in nature should be positive for everyone, and that's really how we see it.
Yeah, yeah, certainly, and thank you for that background. Yeah, I think it's fascinating how the natural capital kind of trendy word has been very evolving and yeah, like you said, a very trendy word over these past few years. When in reality, like investing in nature or just agricultural systems and timber, it's been going on for thousands of years, technically speaking, right? Before the
Mm.
industrial revolution, but in a negative, like you said, chopping down the trees. Right now, we're looking at it from the positive. How can we raise our triple bottom line, enhance our supply chains, and mitigate the negative impacts of climate change, right? So you talked about the nature-based carbon strategy, which is sourcing credits from high impact projects globally, and then the natural capital strategy, based on traditional timber and agricultural business models, but incorporating additional revenue streams from carbon and water and biodiversity. So are we seeing institutional investors beginning to view natural capital like as a true institutional asset class today compared to a few years ago, right? And how are the carbon markets kind of changing that landscape or advancing the asset class itself of nature-based solutions, right?
Yeah, it's a really good question, and definitely I think natural capital has really grown as an asset class, and also kind of how you can think about allocating investment towards natural capital across equity, debt, real assets, project finance approach. Like there are so many different lenses through which institutional investors can seek to allocate to natural capital. And, particularly for long-term investors like pension funds, their alignment of their investment strategy alongside a natural capital strategy is actually very well aligned because, they're quite patient capital. They're seeking for a certain risk-adjusted return over a long time frame. And that coincides with nature because nature is it's not like a short-term yielding investment necessarily, particularly if it's a greenfield asset. It takes time to plant the trees, for the trees to grow, for them to sequester carbon over time. And then if you're looking at it from a timber perspective, or for example, if it's like an improved forest management project, or even just an ARR project where the trees are kept standing and you're seeking to generate carbon credits from those trees, then as we're also seeing from the standards perspective, the crediting windows are getting longer. So it's really, you have to look at it from a real long-term perspective. And so from that side, you're seeing a lot of enhanced interest from institutional investors. Also from the fact that investing in natural capital is typically an inflation hedge, and also considered more broadly to be uncorrelated with, publicly listed equities, for example.
Mm.
So
Yeah, that's a
there are
great
lots of,
point.
yeah, there are
Yes.
lots of positives for
Mm.
sure.
Yeah, I like how you said that it's uncorrelated from typical capital markets, like the equity
Yeah.
market or the debt markets. But that comes with the trade-offs, right? Which is it's, I would say, specifically, I think talking more about carbon markets in correlation to nature-based projects, it's highly fragmented. There are a lot of challenges. It's, very difficult. When I say fragmented, I talk about exit options, right? Like liquidity events, right, for investors. Because ultimately, investors that are seeking returns, that's what they need. They need a liquidity event. They need to exit their positions and make a return. And in traditional capital markets like equities and fixed income, they can do that instantaneously, and other commodity markets because they're liquid markets. Whereas at this current moment in time, carbon markets are, anything but liquid, really. They're illiquid, which also presents a significant opportunity down the line for investors that capture the upside, right? Because of that future growth. So I think it's really interesting that you touched on that. And you know, given your investment background, I want to talk about briefly or ask about the kinds of financial structures or innovations that are making natural capital projects like truly investable at scale, right? And I think this also ties back into the evolving landscape of the voluntary carbon market. But from your view, like what have you been seeing with regard to innovative financial mechanisms and structures that are increasingly allowing capital to flow into nature-based solutions across the world?
Yeah, it's a really good question. I think it also touches on the point of scale and readiness of the voluntary carbon market. To your point, in terms of the voluntary carbon market being able to access institutional capital, that is becoming increasingly possible for projects. And there's definitely different ways in which you can structure a capital stack for a particular project. And I think, what the market looks like at the moment, or what it kind of has been looking increasingly like, is that you've kind of got different points in which different capital providers come in. And so you've got grant and philanthropic capital, which typically comes in quite early to a project. And then that also helps a project to get ready for more institutional grade capital as well. So that's really helpful for a project's development. And then you've also got the other end of the spectrum, advanced market commitments and offtake agreements. So that really kind of also helps product developers to show to the wider market that they've got that advanced market commitment. And more broadly, we're seeing, as corporates look, to your point on kind of long-termist view, corporates will have maybe a 2030 and a 2050 net zero target. and they'll be seeking to shore up their demand of carbon credits in the medium to long term. And then through that, they'll be seeking to access even streams of carbon credits in order to realize their commitments as part of their commitments, because obviously it is a hierarchy and corporates will need to reduce their emissions and offset residual emissions. And then kind of in the middle is where the nature-based carbon strategy could play a role in terms of providing project finance to a project to help it to scale. And that's really where blended finance structures can also come in, because we can also see public finance institutions helping to de-risk projects to help them to scale. And I think that's one of the issues or historic issues of the carbon market, is that it has historically been quite fragmented and very small scale and quite heavily reliant on philanthropic capital to survive and get by. And that's not to say that there hasn't been the ambition to scale. There very much has, and that a lot of product developers really have the goal to scale in a sustainable way, but the capital providers and sources aren't there. But I think overall, the carbon market is ultimately an instrument through which institutional capital can be channeled into these projects that need it the most. So that's why, we see the nature-based carbon strategy is really valuable, because that helps to channel capital into those projects.
Yeah, I want to touch on something briefly that you said, because I was actually, on my end, speaking with a project developer the other day, and a lot of project developers that are new to this space, typically, the founders don't come from a financial background, mostly from science or policy or some type of mix between the two. And one of the questions that she asked me was, what is blended finance? Like, can you tell me about blended finance? Because they're exploring, you know, one of the toughest parts of the project life cycle for a developer is actually raising the capital in the best way possible and choosing the right pathway of capital, because there are so many different pathways, right? So you mentioned blended finance, and for all the project developers listening, I would love maybe for you to talk about what blended finance is, if you can provide clarity around that.
Yeah, no, of course, happy to. And it's definitely, I'd say, along with natural capital, kind of one of those words you have to or phrases you have to unpick a bit, really, to understand what it means in practice. And it can mean a lot of different things, really, depending on the circumstances. But broadly, it's about blending public and private sources of capital for whatever kind of investment requirement, really. But typically, public finance will have a varying set of goals and impact requirements, and also goals regarding their kind of catalytic impact of their capital. And that, so through allocating X dollars of public finance, they want to catalyze Y dollars of private finance off the back of that. And really, it's about, I guess, kind of structuring an investment in a way that allows typically a public capital provider to take more of a first loss position that helps to de-risk the investment for a private capital provider. And so that could be in terms of like the timelines in which they come in. So coming in a bit earlier to a project in terms of when the project is more risky. So for a carbon project, as it approaches issuance, obviously the risk decreases, and when it's already up and issuing, then the product is inherently less risky. But it could also just be the financial instruments through which they take like a subordinated tranche of financing compared to a private capital provider. And ultimately, the goal is to enhance investment flows into these projects, and also to really also enable the product developers. It's definitely meant to be a collaboration and a partnership and a long-term partnership, because these carbon projects are very long-term, and that's also why it's helpful to have the patient capital piece of the DFIs and public finance providers.
Certainly.
Because because it can also help to scale them up to institutional requirements, in that public finance will have certain reporting and governance requirements, and so will private finance. And then actually that could also help to catalyze one project for a product developer that then would help them to actually maybe maintain a long-term, or help them to kind of realize a long-term offtake on that product, or even to just help them to allocate resources to other projects as well and get those off the ground on the back of this kind of catalytic funding. So we definitely see that as, or definitely very positive. It's more just how can it be deployed in practice, and it's kind of one thing as a theory, another thing on the ground. But yeah,
Yeah.
it's definitely something that you kind of see public finance as a whole exploring how they can be involved in nature finance and carbon finance.
Yeah, yeah, certainly. And I like the way that you articulated that in a way. One of the angles is, public financing can take a more long-term, holistic approach, and there's a lot of private, equity, venture capital funds that maybe have a 10-year timeline horizon, right, or a 20-year, whereas a lot of these projects, the terms of the projects can be 60 years. I mean, it can be 40 years, which is a very long time for a lot, too long for investors that are seeking a return in the near term, right? So yeah, I think that's a well articulated. And yeah, I think shifting over to our next topic, I want to talk about, so now, we've talked about kind of the intricacies of, natural capital and some financing mechanisms, but actually scaling finance for climate and nature itself, right? I mean, to meet all of the climate and biodiversity goals globally, I mean, there are trillions in capital that must flow into natural nature-based projects. And this means solving for all the various risks and, you know, aggregation, permanence, like the policy risks, while also making the projects investable for mainstream finance. And I think the next 3 to 5 years will be really pivotal in determining whether natural capital can truly scale. And I think the carbon market will play a huge role in that, as we're seeing already. Like we're seeing some, and that's why I touched on the innovative kind of financial structures before. It's because I've been seeing some funds doing some really interesting financial structuring that we haven't seen before in the natural capital space, because of the carbon markets is allowing that flexibility to kind of, let's say, combine an equity investment with the offtake under one roof, under one structure, whereas traditionally it's just, separate. Where now they're combining the two under one with different type of flexible rules for the streamlining of the credits. But what would you say, are some of the biggest challenges today to actually scaling natural capital finance? And yeah, I think that let's start there. Like, what do you think are some of the biggest challenges, barriers to scaling the industry, scaling it as an institutional asset class? Because it seems like only, a number of banks are focused on this, right? Like some some are all in, and maybe like HSBC, like in your background, and but some are not touching it at all, right? I think it's really a fascinating landscape to look at.
Yeah, no, it's a good question. Obviously, there's very many different lenses from which you can look about scaling investment into natural capital, right? Like from an asset perspective, but also from a capital allocator perspective. And obviously we touched on the carbon markets, and that's one kind of sub thematic you could talk to under natural capital as well. More broadly, it's a bit of a case of supply side and demand side, right? I'd say particularly for when you're thinking about a strategy that can fit a certain pipeline of potential investments that you're looking at, but that also ultimately fits the end investor. there's definitely a conversation in terms of what makes most sense, what are investors looking for, and also what are the assets that you're assessing and do they fit those investors' requirements. So it's quite an iterative process as you're kind of thinking about and developing that over time. And to maybe focus on the carbon markets, as I'm sure you know, you've noted yourself already, and over time, corporates are allocating increasing amounts of capital to the voluntary carbon market. But part of the kind of clues in the name in that it is globally, there is no global compliance market to incentivize and kind of regulate with a stick versus a carrot approach for corporates to commit capital to acquiring carbon offsets. Right now, it's from a global perspective voluntary, and of course you've got various jurisdictions whereby there is a compliance scheme, and those have their own benefits and I'm sure own challenges as well as they seek to scale. And maybe we will at some point see more of a global compliance market for carbon, and then that will also help to unlock demand that is latent right now. But where you can see progress being made, or indeed kind of corporates really seeking to lead that voluntary action, is definitely across like many different sectors of corporates, and really going above and beyond what they're actually required to do, which is really positive to see.
What are some of the challenges
The
to see
challenges, yeah, got you.
it? And I think maybe
Yeah, I guess,
examples give from like what investors communicate to you, or like what you've learned from working with
yeah,
investors in your fund, right? Like what do
yeah.
they do on like their what they're worried about?
So right now there are carbon projects all over the world, that are requiring financing. But then there's also the question of scale, and do those projects have sufficient scale to operate at a level where they could produce sufficient carbon offsets for enough corporate demands? And there's definitely, probably a difference in scale between avoidance, like REDD+ projects, and removals projects like ARR projects, for example. Simply because typically if you're developing a greenfield ARR project, you'll start on day one and you'll start to plant your saplings, and that takes a lot of time to get up to a sufficient scale. But from a REDD+ perspective, if you're seeking to preserve large swathes of the Amazon rainforest, and I think, one of the we're seeing the methodologies also shift towards CCP alignment, and in general seeking to ensure high integrity credits from their methodologies and from the standards. And with the VM48 methodology for REDD+, that's seeking for a more kind of jurisdictional approach to how REDD+ projects are structured and how they're credited. And so we'll see how that affects potentially institutional investor demand, or more corporate investor demand for those projects, because there's definitely that lever of the enabling environment and ecosystem within which these projects sit. So are the methodologies right? Are the project structured in the right way? How are also the governments of the various countries assessing their involvement in the carbon markets, which is definitely a theme you can see emerging in terms of, do they have specific carbon market regulations? Are they seeking to levy a certain tax on carbon credits that are generated from their projects within their jurisdictional boundaries? And so all of these factors really help to determine where the capital is flowing, and what incentivizes scale at pace as well. And I know we touched on blended finance before. I think that's definitely another key point in terms of helping that institutional capital to get de-risked, to enable it to flow at a greater pace.
Yeah.
Definitely an ongoing topic in the market,
Yeah.
because
Yeah. I mean, it's evolving
yeah,
in real time.
yeah, yeah, exactly.
In 10 years, we're going to look back and be like, wow, can you believe what it was 10 years ago?
Yeah,
I think
exactly.
a good point to note is, in my view, what the voluntary carbon market is doing for a lot of these projects at the end of the day is making them more bankable, right? These greenfield agroforestry commodity businesses or timber businesses that have been impacted, let's say, by long-term drought or by the negative impacts of climate change. There's that side of it as well, the physical risks of climate change that have impacted, farmers and supply chains. So it's making um, that entire industry more resilient and also making these specific projects more bankable for investors by having stacked revenue streams, right? Like, and often this is a, quite a debate, or not a debate, but there's a very fine line that people, have between with additionality, right? But with projects that only rely on the sale of carbon credit revenues. And then there's projects that have multiple revenue streams that are stacked, that diversify risk, that investors like a lot more than the projects that are dependent just on the credit revenue streams. And oftentimes those projects that have stacked revenue streams are also the most impactful as well. I mean, these are agroforestry commodity businesses that are taking place in the global south. These are businesses that have been impacted by climate change. So I think the crediting mechanism is creating, really allowing more institutional capital to flow into these nature-based businesses, not just carbon projects, but the actual businesses themselves of the commodity markets. Um, but you touched on methodologies and you touched on standards a bit. So I want to ask about your perspectives on some voluntary and market initiatives such as the ICVCM and the VCMI. So like the integrity of the credit and then the integrity of the claim, right?
Yes, yeah,
What do you think,
exactly.
what do you think of those initiatives? And they're trying to build trust and confidence in the market. But at the same time, others have argued that um, some angles have created the stagflation and created actually a barrier to entry for a lot of corporates and market participants, right? And there's some debate there, particularly around VCMI and the integrity of the claim, right? Like one thing is the integrity of the credit, which I think everyone agrees on. Like it's great. Um, but yeah, would love to get your thoughts on those initiatives and with regards to quality and with regards to claims.
Yeah, thanks for that question. And it's interesting, right? And this is kind of to our point on how fast the market is moving. Like these initiatives weren't around a few years ago. And so also from an investor perspective, from kind of every stakeholder in the market, product developers, um, corporates, governments are all trying to deal with a very rapidly moving policy landscape that again is all voluntary as we discussed as well. So ultimately, to your point, building trust is clearly positive. Scaling investment, scaling positive outcomes for local communities who need it the most in the global south is all really integral. And so these initiatives and their work to do that is great. And I think it's really just about, how it's operationalized, and they seem to be moving at pace and engaging with all the relevant stakeholders, and methodologies are also seeking to ensure that standards are seeking to ensure that their methodologies are CCP aligned and tagged, which should also help encourage additional demand for these particular projects who are using those methodologies. And so it should be hopefully a really virtuous circle of, further structure for how to achieve high integrity, and further alignment on that should really help the market grow and evolve and channel more finance into where it's really needed the most. So So yeah, I think
Yeah.
we will continue to engage with these and follow all the latest developments because it's super important for carbon finance as a whole, to really have that, to really be able to ascertain in more kind of concrete way the quality of a project.
Yeah, certainly. And it's all kind of intercorrelated, right? Because
Mm,
the VCMI, they want to be complementary to SBTI, right? And
yeah.
SBTI, they have um, nearly 11,000 corporates having covering over 40% of global market cap in with net zero or targets, right? So these commitments are kind of reshaping carbon strategies completely and impacting the market significantly. So one change, right, completely changes the market dynamics. So I think touching on, shifting gears to more corporate sustainability and maybe how teams are under growing pressures from regulators, investors, stakeholders to deliver, positive impact investments, right? But also deliver real, change and while raising their triple bottom line and de-risking um, their long-term transition and both physical climate risks, right? So from your view, like, how do you think corporates are integrating nature into their climate and sustainability strategies?
Yeah, it seems like I don't know if you've ever seen the movie Everything Everywhere All at Once, but it feels like that's what corporates are having to do.
No,
And
actually,
particularly,
I've not seen that movie. I'm
yeah,
going to watch that now that you mention it.
it's got nothing to do with climate really, but it's a nice kind of tagline, I'm sure, for how sustainability professionals are feeling. Um, because I'm sure they're, yeah, to your point, kind of caught between a lot of different yeah, policy shifts, directions from internal and external stakeholders as to how to best manage sustainability risk, but also sustainability opportunity as well, and really hopefully see themselves as a market leader in whatever sector and corporate they're working for. And from a nature perspective, I'm not sure if you've had any guests mention TNFD, and obviously now you've got corporates adopting and reporting on that framework in increasing numbers, and that's one way for corporates to identify the risks and opportunities from nature that present themselves in their business model and overall portfolio.
Yeah, and touching on that, is that just so I remember, this is the TNFC or that's voluntary or is it compliance in Europe?
Yeah, no, so TNFD is voluntary, but it's being baked into or kind of seeing similar requirements adopted into, for example, the CSRD in Europe.
Yeah, yeah.
So,
I mean, Europe's
so
extremely, they're probably the most far advanced in terms of regulatory policy, like the
mm,
economy itself. Yeah. So I was just uh, forgetting which term, and now you can really feel for the sustainability professionals, right? Because
yeah,
all these different terms and rules and regulations in each different jurisdiction, right? I mean, there are
exactly. Yeah,
the voluntary, and then there's compliance as well.
yeah,
So it's just a
yeah.
messy landscape.
Yeah, no, definitely, and carbon credits can and do form part of sustainability professionals' remit and their broader strategy as part of their company's overall ESG strategy. And
Mhm.
while carbon credit, the kind of ultimate aim or kind of how you'd quantify a carbon credit is 1 ton of CO2 avoided or removed, there are clear co-benefits, particularly of nature-based solutions projects, in terms of biodiversity improvement, soil health, water quality improvement, community benefits, social benefits on the ground as well. And so all of that can kind of also incorporate into how they're assessing their impact and kind of how they're allocating their capital to ensure that, within a kind of sustainability budget, that they're ensuring that they're kind of meeting their regulatory floor, but also they've got a kind of ambition, hopefully not ceiling, but they've kind of got an ambition uplift on top of the floor as well, that can drive them to go above and beyond what's actually required of them, to the TNFD point as well.
Yeah. Yeah, certainly. And I want to be conscious of time. Um, so I think this would be a good segue, into our last kind of segment to talk about women in carbon, right? Because obviously we touched on in the beginning, we touched on your background from banking to, now asset management at CAM, but you also co-founded Women in Carbon, which, you know, um, a lot of people in the space globally maybe our audience isn't really familiar with. So I would love to ask, what inspired you to start Women in Carbon and how maybe has the community evolved since its founding and touch on that, right? Because that's another besides your primary investment role, that's another
Yeah.
thing that you're leading out with a great team, right?
Yeah, no, thanks for picking up on this. So yeah, I'm one of the co-founding members of Women in Carbon, which was set up just after International Women's Day in 2023, with a great group of fellow women in the carbon space. And the goal is really to amplify and empower the voices of women in the carbon industry. And also for myself personally, coming from investment banking, which is again another kind of typically male dominated industry, particularly at the senior levels, um, have always felt very empowered by speaking with other women and having that space to do so, not in a kind of exclusive way at all, but in a very inclusive fashion, just to kind of have that space and platform to do so. And so we started in London, and have since grown to over 10 chapters across the world, which has been really great to see in the last couple of years. And yeah, we now have different chapters seeking to do different things all over the world, but really the kind of core goal remains. And it's really, I'd say, probably our two kind of main streams of work are partially kind of the networking and career building piece, to allow women that environment through which we can kind of host informal gatherings, through which they can meet other women that they might not have heard of and or kind of met before. And I think particularly after COVID, there's definitely a kind of craving for personal connection, face to face, which has been really nice to help realize, particularly for the Women in Carbon community. And
Mm,
then there's also the more kind of knowledge sharing and event side of things, whereby we would partner with various kind of event sponsors who might also be kind of corporates or other entities that are active within the carbon markets and broader climate finance space. And then we would seek to partner with them on a particular event topic, be it kind of, for example, if it's a tech company, then we might do an event on DMRV and carbon projects, or if it's a law firm, we might do a project on latest legal trends in the carbon markets. So that's been really great, and it's great to kind of see how naturally it's evolved. We're all volunteers, and we all kind of do this on the side of our day jobs. So yeah,
yeah.
a big shout out to the whole co-founding team.
Yeah, that's awesome. So you said
Yeah.
10 chapters and where
Yeah.
so globally could, could you kind of list like which cities there or countries
Yeah, yeah, yeah.
they're in?
Yeah, no, and I'm happy to do so off memory, and apologies if I forget any. And also just yeah, a call if I don't mention somewhere where you're listening and where you're from, then please do reach out. We have a LinkedIn page, and yeah, I'll be happy to get in touch about starting new chapters. But we have London, Paris, Amsterdam, Zurich, Mexico City, Brazil, Colombia, Australia, um, New York,
Mm.
San Francisco, Toronto. I feel like I'm probably forgetting some, but
Is
that
there
was
Singapore? Is there one in Singapore or
yes,
no?
there's yeah,
Oh,
Singapore.
I
Yeah,
think
we
that was
do.
the
Yeah,
10th. I think that counts. Wow.
yeah,
Yeah, that's
yeah,
amazing. Very
yeah.
global great. Yeah, so I mean if there are any like women in the audience that are listening interested in getting involved, which they do. Just like you said, reach out
Yes,
via.
yeah, please reach out by LinkedIn. That's kind of our main channel of communication, and where we would also share upcoming events as well. So yeah.
Great. Yeah. Awesome. Well, so Phoebe, can you share a story that captures the kind of mentorship or community impact that you've seen from the Women in Carbon initiative that you started?
Yeah, no, very happy to. I think one that comes to mind is that I spent some time last year in Australia on secondment to one of our parent companies, Pollination, who's headquartered in Sydney. And while I was there, my one of my goals was to establish a Women in Carbon Australia chapter because we didn't have one. I could definitely, I think actually even before I touched down in Australia, I'd received inbounds from various women in the carbon space there who were really keen to get involved, and so that was great. And so straight away, we set on working together to get one set up and managed to do it. And within a super quick time, and I think we got kind of over 100 subscriptions for an event, which yeah was really great to see because I guess sometimes when you're in a market that's so global, and you can almost maybe sometimes feel also a bit shut off because you might be remote working, particularly because Australia is so vast, like not everyone lives in a big city. And but the ACU and compliance market is very is a sorry, we can cut this bit out because I'm mumbling, but the ACU market is very big employer, and there's lots of businesses that are within that ecosystem more broadly. And so it was really nice to kind of see that demand for the chapter come to life. And a lot of women were saying, why didn't we do this sooner? So that was really rewarding to see. And it's still going from strength to strength. And they've also had some events in Melbourne as well. So that was really
Yeah.
nice.
Yeah, that's great. Yeah, thank you for sharing. Um, and I think to close things out, I would love to get like some forward-looking perspective, right? Like what do you see for the industry maybe 5 years from now? And like what are your biggest like what are you hoping for, right? Or what are you not maybe not hoping for because that sounds a little like what do you want to achieve, right? Or what do you think, Cam is trying to achieve? What do you think the carbon markets in 5 years it could be a completely different landscape, right? Because I mean 5 years ago from today, the market looked completely different than it does today, right? So it's very interesting, like to put it into a forward-looking kind of perspective. So I'd love to hear your thoughts on that.
Yeah, definitely. And I mean, even if, comparing to 5 years ago when I hadn't joined CAM quite yet, but I was going to soon, compared to now, the market's moved so much. And we were talking about even all of the kind of wider standards and guardrails that have been established within that time frame. So I'm sure we'll see even more of a bigger shift. But what would, in terms of kind of, where I see it going, or where it'd be great to kind of not be talking about how do we get the market to scale, but be there, and I think you can also get stuck in and talking rather than doing. And definitely
Mm,
CAM was established to scale institutional
yeah,
capital into
yeah,
nature, and that's definitely what will be continued to do, what we'll be continuing to do over the next 5 years. And um I'm positive about nature and the carbon markets more broadly, because we'll always need nature to survive as humans, and so much of our economic life
mm,
and way of life depends on nature, even indirectly and also directly. So
100%.
I'm positive on that side, in that we're going to continue to need it. So we're going to continue to need to invest into it, and
Yeah,
there'll be increased incentivization to do so, with increasing guardrails, structure, integrity initiatives that help to kind of guide that capital flow into where it's really needed. And also as we approach 2030, which is where we'll be in 5 years' time from a kind of demand side perspective, corporates will be approaching, some of them might have set 2030 short to medium term net zero targets, and those, so there might be a bit of a reassessment of those, or kind of a consideration of where corporates have got to versus their goals as well. So that will
Mm.
be hopefully helping to incentivize further demand for carbon credits, and then also further capital allocated to the voluntary carbon market. I don't know if we're going to see a kind of global standard emerge of high
Mm.
quality. Maybe that's too much to dream of, having one aligned approach that works for everyone and is very streamlined, but we'll see. We'll see where it gets to.
Yeah, we'll see. I mean, the one thing I will say is like we've certainly seen the amount of competition increase rapidly in the last 5 years, right? I mean, from having probably two kind of main standards, now it seems to be a more, you know, wouldn't say like completely equal level playing field, but there's certainly a lot more competition at the standard level, right? We're seeing all these new standards with these amazing teams come into the market and really trying to drive impact where it's needed, right? And also, I really like what you said about talking versus doing. I think that's the biggest, you know, biggest hurdle for the industry, right? Is just go out there and do it. Stop talking about it for so long. Let's just, take action, right? Today. Like
Mhm. I
there's an
mean, it's
ongoing
a
I was gonna say there's an ongoing like joke in the industry how the carbon conference industry makes more money than the actual carbon market itself because it's just people meeting up and talking about things. And I think that correlates to what you said. You gotta talking, only gets you so far. You gotta take action. You gotta in whatever, you know, area of your life, you gotta stop overthinking it and just go do it and learn, you know.
exactly. And I think there's a very overused phrase, which is to not let perfect be the enemy of the good. And I don't just want to repeat that, but at the same time, there's definitely a balance between, ensuring that you have appropriately assessed the risk, and you understand the asset class and what you're investing into, but at the same time, building having all of the stakeholders aligned to build that enabling framework as well, and not be prohibitive to scaling capital at the same time.
Yeah, certainly. Well, thank you so much for joining me today. It's been a fantastic deep dive, and I hope the audience enjoys the episode. And thank them for tuning in to This Week in Carbon. We'll see you next week.
Thanks so much for having me. It was a pleasure.